What's behind the new Inpatriate tax regime?
Hello everyone, I'm Lorraine, a counsel in our employment law team.
Hello, I'm Camille, associate in the personal tax, social security and reward team.
Together with Camille, we will guide you through the Luxembourg's Inpatriate tax regime.
This regime aims to attract and retain talent and highly qualified hires in Luxembourg.
It was introduced in 2011, integrated into the income tax law in 2021, and modernized in January 2025. The criteria for accessing the regime remain broadly unchanged. On the employee side, the Inpatriate must become a Luxembourg tax resident. They must not have been tax resident in Luxembourg or within 150 kilometers of its borders, or taxable on professional income in Luxembourg during the 5 years prior being hired. Their annual fixed remuneration must be at least 75 key euros. They must spend at least 75% of their working time in Luxembourg. Specific conditions apply depending on whether the repatriation occurs through a secondment or recruitment, and are mainly linked to the employee's level of expertise or seniority. On the employer side, the share of employees benefiting from the regime cannot exceed 30% of the total workforce. And the employer must report the list of Inpatriates to the tax authorities each year by 31 of January.
When the regime was introduced, the objective was simple. Certain costs related to the Inpatriate, when borne by the employer, were exempt from income tax. Until now, there are two main categories of exempt costs. Non-recurring costs, such as relocation expenses, were fully tax-exempt. And recurring costs, like housing costs or tax equalization, benefited from tax exemptions within certain limits. On top of this, a specific repatriation allowance could be granted to employees and benefit from a 50% tax exemption. As of January 1st, 2025, the regime has been simplified significantly. Under the new rules, the Inpatriates benefits from a lump sum tax exemption of 50% of their annual remuneration, capped at 400k euro. This is a major simplification for both employers and employees. Let's take a quick example. An Inpatriate is hired with a fixed annual salary of 337k euro. Under the new regime, their new remuneration would be equal to around 260k euro, while it would only be around 188k euro without the application of the regime. This represents a significant tax saving for the employee. And in case the annual salary exceeds 400k euro, the tax exemption is capped at 200k euro.
An important requirement is that the Inpatriate must not replace one or more employees who do not benefit from the regime. This anti-abuse rule aims to prevent employers from replacing local employees with Inpatriates simply to reduce costs. The assessment is carried out on a case-by-case basis and remains under the control of the tax authorities.
This new lump sum mechanism simplifies the application of the Inpatriate regime and reinforces Luxembourg's attractiveness in a competitive international environment. Thank you for watching, and of course, feel free to reach out if you have any questions.
And stay tuned for the next episode.